all that stuff on boats on the water coming from China, not coming into American ports because right now we're at 245% tariffs. That's a complete collapse of trade. And so it's got to get resolved. And it's a game of chicken between Xi and Trump. I think it'll get resolved in the next 60 days, but I'm guessing like everybody else. And Powell's in the same boat. So it's classic that the executive, in this case Trump, would jawbone the Fed to drop rates. That's been going on since the beginning of time.
Trump versus Xi, Bitcoin versus traditional markets, and can either make a comeback. Mr. Wonderful says that China and the US are playing a game of chicken. Bitcoin shows promise against traditional markets, and the narrative around layer twos is much more exciting than ETH these days. O'Leary Ventures Chairman Kevin O'Leary, welcome back to Markets Daily.
Great to be here. Thank you.
All right, let's talk about crypto markets off the top, and then I want to broaden the conversation out a bit. You know, if we look at Bitcoin this morning, it is continuing to outperform traditional tech benchmarks. Talk to me about what this signals for you.
Well, this is a recent development. As you know, gold was outperforming Bitcoin for quite a while during this incredibly volatile period in equity and debt markets. And now it seems to have latched on to be an alternative where it was really a risk on, risk off for quite a while, no different than just the indexes, the stock indexes. And so we've seen a decoupling, which is very, very interesting. I think a lot of this has to do with where we're at in the regulatory cycle regarding all of crypto. As you well know, there is a bipartisan bill, the Stablecoin Act, now called the Genius Act under Haggerty, that looks like it has broad support towards digital payment systems, basically a stablecoin backed by the US dollar, which is itself not a risk asset. However, it is a march forward in finally regulating crypto. And everybody's figured out we want this regulation because we would like to get to the point where we get through this first Stablecoin Act, and then we get to the Market Infrastructure Act, which finally determines which tokens and securities that are crypto are commodities and which are securities, which would be a great outcome. Because once you have that designation, you know which regulator you're dealing with. And the tone has changed in Washington. Everybody's been talking about this. One of the reasons that we see more interest in Bitcoin, period. But the real granddaddy opportunity is to make crypto and the underlying compliance platforms work within the financial services industry in the US and get the SEC and other regulators to stop litigating everybody. We're not there yet. We're pretty close. And that would secure crypto as a productivity platform, if you want to think of it that way. I think the usefulness of crypto is how it can reduce costs and add productivity to commerce, whether it's a stable coin or whether it's a Bitcoin for risk on, risk off. So all of the tone is better, and I think the market's reflecting that. But in the last week, seeing Bitcoin specifically outperform the indexes, a lot of people are waking up and looking at that saying, wow, this is a long time since this occurred.
Break that down for me even further, because I think a lot of people look at the maturity, the path to maturity of Bitcoin. They look at the path to regulation in the United States and they think, with more regulation, with more mainstream adoption, that should mean that Bitcoin is more correlated with traditional markets. But, you just mentioned that decoupling. So break that down even further for me.
Well, I'm not sure I agree with that, and I'll tell you why. If you look at allocations traditionally in hedge, pension, and sovereign wealth, it's not uncommon to find up to 5% weighting in an alternative asset like gold, which has outperformed everything in the last few months. It's been a harbor of security, stabilization, and well past old highs after a post-inflation rate applied to it. So what percentage of those institutions, because look, I appreciate that retail investors like to get involved and many of them use ETFs for Bitcoin, but the real money is managed in sovereign pension, and high net worth family office around the world. And they have really not yet allocated 3 to 5% weighting in Bitcoin. Some of them have, but it's nowhere near as mature as gold. And gold it has proven itself again. I have a 5% weighting in gold. Half of it's bullion I pay for storage. Half I round out and in and out on the GLD, or you can use other ETFs that are even less expensive, maybe not as liquid, but that's a classic institutional play. And this year it's worked, and it's worked very, very well. And I think people are waking up when you say break it down. I now allocate Bitcoin. I'm not 5%, but I'm 1.5%. So I'm on my way to a 3% weighting total crypto securities. If I look at everything I've got, including investments in the exchanges, which I consider the picks and shuffles, I'm at 19%. So I'm right up there. 20% weighting is not uncommon for sectoral weighting. And so I own WonderFi up in Canada, Coinbase in the US. These are kind of Robinhood. I consider that to be moving into a crypto, that I own that as well. These are the infrastructure plays. And the reason you would do that is if you really believe the Genius Act, the Stablecoin Act, is going to pass, you're going to create this FX market where you can actually transfer and digital payments at a fraction of the cost of a Fed wire or a traditional bank wire. I mean, this is a massive opportunity, and I don't think the market's woken up to that yet. So I'm playing both the actual tokens and I'm playing the infrastructure through the exchanges.
I want to get your perspective on ETH right now. It's down over 50% year to date. And we're talking about, stable coins and infrastructure play. And in that conversation, for a long time, ETH was a dominant player. Talk to me about how you're looking at ETH and Ethereum and how you expect to see price performance in the short term here.
Well, there's no question there's a move to the L2s, Solana onward. And if you want to talk about efficiency, ETH is not the most efficient or the fastest. Now, you've got players like Polygon on top of it, and there's a lot going on. It is still the standard. But when I think about, portfolio managers, and we talk all the time, and here's something really you got to think about. If you're just going into the crypto the first time, and you're just saying, okay, I want to allocate 1% in my $2 billion fund, that's not uncommon. They don't go to ETH. The only two assets they go to is USDC, or a stable coin for liquidity for a bunch of reasons. And I use USDC. I have to full transparency. I'm a shareholder of Circle. So I like the fact that it's domestic and it's auditable, and I think it's going to survive at one-to-one audit and all that. But it's Bitcoin. If you want exposure to crypto volatility, it's Bitcoin. ETH is not the go-to place unless you start to understand the utility of it. And then you start to ask yourself, well, why am I only in ETH? Why am I not in L2s? Like, why am I just doing ETH? So I think for the billions that are waiting to come into crypto, it's not going to be ETH. It's going to be Bitcoin itself. And, frankly, there's a lot of people that say, I don't need anything else. If I want exposure to crypto volatility, I'll just buy Bitcoin. And they haven't been wrong.
ETH still, though, the second largest crypto by market cap. Do you think that it could be dethroned in the near future?
I think it'll be very hard to dethrone it, but I certainly don't I own it too, but it's not the only one I own. I look at all the innovation coming. And a lot of people don't understand innovation at the L2 level, but blockchain really matters. But speed, efficiency, my goodness, ETH is slow. I'm sorry, but it's slow. And I think a lot of people know that, and the more transactions get piled on it, it doesn't get any better. I'm not there for a full weighting on ETH. It's a 1%er for me. So I'm just one guy. I have no problem with it. It's just, that's not going to be a 5% weighting ever for me, because there's so much innovation around it, on top of it, away from it. That's not a good sign. You don't see that kind of momentum on Bitcoin. Bitcoin is the granddaddy anchor of any crypto portfolio. It just is, and it's not going to change. And it's the way it is. Sometimes you have to realize as these asset classes mature, there's always the granddaddy. Well, Bitcoin's the granddaddy.
I want to zoom out now. We have a lot to talk about. We have rates, we have China, we have tariffs, You have a lot going on, and I want to start with the potential for rate cuts. So, as we know, the Fed hasn't cut rates yet, while the ECB has cut, I think, for the seventh time in a row. I recently had our a markets editor from CoinDesk on this show, and he said that someone is making an error, and we're just going to have to wait and see who it is. Are your thoughts here?
Well, here's the Powell's in a head squeezer at chair of the Fed right now because his mandate is 2% inflation and full employment. Doing well on the employment side, not so well on the inflation side. And so he's looking at one factor right now. He's saying, how long is this China dance going to go for? I mean, the rest of the whole thing with tariffs is going to get resolved with the EU, Britain, Switzerland, Thailand, Canada, Mexico. They're all coming to the table with either a reciprocal idea, maybe 10%, or a zero tariff for free trade. One of those two alternatives. But China's a different beast. This is a all-out economic war between the U.S. and China. And it's not just tariffs. The question about IP theft has come up. You saw the list of Trump's grievances. IP theft was on there, and there's a big problem. And China has been stealing IP for 20 years. Getting compliant with the World Trade Organization, they joined in 2000. They have never once been compliant, not a single week. There's thousands of complaints unresolved. No access to their court systems to litigate trade disputes, yet they have full access to the U.S. Capital markets, huge problem there because there's so many Chinese companies listed on NASDAQ and the New York Stock Exchange that are not compliant with GAAP. They were given 3 years to get compliant. They didn't abide by any of it. They totally ignored it. And now there's a new sheriff in town just put in place. Paul Atkins is the new SEC head. And he said, look, I'm going to enforce these laws. I'm going to delist these Chinese companies. They said they were going to get compliant and they didn't. The former SEC, Gensler, didn't actually implement those laws or at least make Chinese companies be compliant with them. This new sheriff, if you want to call him that, is going to. And I think all of these things have to be resolved with China. And so if you're Powell, you're watching this passion play out and saying, I'm not going to drop rates. I don't know what inflation is going to be like. If the China thing actually happens, it could really, really be inflationary because the U.S. market is the largest consumer market on earth, almost 40%. And all that stuff on boats on the water coming from China, not coming into American ports because right now we're at 245% tariffs. That's a complete collapse of trade. And so it's got to get resolved. And it's a game of chicken between Xi and Trump. I think it'll get resolved in the next 60 days, but I'm guessing like everybody else. And Powell's in the same boat. So it's classic that the executive, in this case, Trump, would jawbone the Fed to drop rates. That's been going on since the beginning of time. The Fed's independent. The market wants the Fed to be independent. Powell's done a pretty good job. He's not going to be browbeaten by anybody. No one's going to tell him when to lower rates. That's what his mandate is. He decides with the data that comes in. And I don't think Trump's going to fire him either. It's a bad sign to the bond market to fire the Fed and replace it with somebody that's compliant with your wishes. The market's not going to like that. That's not going to be good for the stability of long-term Treasury debt in the United States.
Let's talk about that a little bit more. I know you say that Trump and Xi are playing a game of chicken, or we're in a cat and mouse situation here. You said that you think it's going to go on for 60 days. What happens from here? What do you think? How does this play out?
Well, you got to find the off-ramp where both sides save, face. And so for Xi, he wants to keep all his factory workers employed. Otherwise, he has riots in the streets. And for Trump, he doesn't want to see hyperinflation in the U.S. if these goods and services can't be purchased at low prices by American consumers. And so what he's trying to do is clean up. And a lot of people, including me, advocate for this because for 20 years, China has just not played by the rules. And the funny thing is they don't give a damn. They don't care. And so, because there's no consequence, there's never been a consequence. And this administration comes along, and I always say this about Trump, half the market has Trump derangement syndrome. They just go crazy with the fact that he's back in the White House. They can't stand it. And I say, look, I don't get caught up in the noise. I focus on the signal. I'm a policy guy. I just care about policy. And so I don't shill for Trump. I don't shill for any politician. I shill for policy. From policy perspective, I'd like to see this China issue resolved because I, too, have been ripped off. My IP has been ripped off in China. So many of the investments I've made in companies there get to $5 million in the trajectory of their new product or service in U.S. domestic markets. And then you find out the Chinese have ripped them off and selling it back into the U.S. at a 40% discount because they don't have to recover any of the IP costs. They never invested in R&D. So they just rip the product off. And that's happened countless times. And for one, I'm tired of it and I'd like to see it resolved. And I think many other countries as well that have had this happen to them would like to see it resolved as well. And so maybe for the cost of some volatility, VIX is up high, I get it. But if this thing could be resolved, and it has to be before the midterms, Trump can't go into the midterms with this kind of volatility or he'll likely lose his majority mandate. So he doesn't want that to happen. And Xi can't afford 2 years of factory workers not making anything. So it's an interesting situation.
So I guess, with both parties at the table playing this game of cat and mouse, who gives in? What's the negotiation tactic here? Because like you said, this has been going on for a very long time. I know you've proposed a 400% tariff to kind of get things to a standstill so this negotiation can happen. But where does the concession come from here?
Well, the way you can assume right now between the two countries is a backdoor dialogue going on. And I think many people believe that to be the case. They're just trying to figure out who blinks first. And in the case of Xi, he's got to look strong to his people, and so does Trump. So you don't know how it happens. It often, the way policy seems to happen with Trump, a lot of it happens on, aircraft on Sundays when he's flying back up on Air Force One to Washington. He comes out and starts talking to reporters. I've noticed that it's becoming a trend. He goes to Mar-a-Lago for Thursday, Friday, Saturday, and flies up Sunday back to Washington. And all of a sudden you get policy. It could be on one of those trips, or it could be that Xi announces he's going to meet Trump in Riyadh or Geneva or something. It's that kind of thing that's going to happen. And I'm not too worried about it. The market doesn't seem to care that much about the European negotiations, Canada or Mexico anymore. Canadians have an election that's going to be resolved on the 28th, and they'll be back at the bargaining table after that. So all of this stuff is going to get resolved. People don't like volatility. And then you've got all the pundits saying, recession chances 50%. They've been calling for recession for 4 years and we haven't had it yet. So, I'm just in a wait and see mode. And by the way, the market's correct all the time, 20%. S&P down 14, 15% right now. So you've gone from sort of like a 23 P to 17, and not a bad place to put some money to work. I've been doing a little nibbling myself. There's a lot of gnashing of teeth and angst, but corrections happen all the time, and they happen for different reasons. You want to blame the tariffs, or you want to blame job owning the Fed, blame whoever you want, but take advantage of a correction. It's always traditionally been a good place to enter and put some dollars to work in the indexes. And I've done that. And of course, having some Bitcoin and gold has not been a bad outcome either. And so there's always something working somewhere in a market with volatility. And you have to focus on that too.
For someone who would maybe come up to you at an event, or maybe even one of your kids, I'm sure that it wouldn't be their first time investing, but for first time investors out there who want to take advantage of the correction, where would you tell them to look?
Well, I have a very simple rule that's worked for me for decades. Never more than 5% in any one stock or bond, never more than 20% in any one sector. So we have 11 sectors, technology, energy, that kind of thing in the U.S. economy. So I make sure that my sectoral weightings remain below 20%, and any position, including alternatives like Bitcoin and like gold, I max out at 5%. And that's really worked for me. So you have this, I remember I bought Tesla before it split, and the thing just kept becoming 6, 8, 9% of the portfolios, and I kept trimming it back down to 5%. And eventually my cost base was zero. Now I own Tesla with a zero cost base, and it's volatile, but that's the kind of thing you have to do in maintaining diversification in a portfolio. But I definitely think owning some Bitcoin, and for me, I love USDC because the yield on that this morning, I think, is 3.822, which is better than a savings account in a bank. So I have a bunch of USDC sitting on exchanges getting yield. There's so many different ways to play it, but you do have to manage it through diversification. That's the key. And I consider crypto will be the 12th sector of the economy within 5 years because of the productivity it has for digital payment systems and storage of wealth. So I've been maintaining my kind of cryptos. I mentioned earlier at a 19% weighting, including the exchanges. So, owning Robinhood, owning Coinbase, owning WonderFi. These are the big North American exchanges where no matter what crypto is doing, up or down, the exchange is making money because it's the infrastructure. Volatility is good for an exchange. So I own all three of them.
I mean, you mentioned a bunch of crypto equities there. What are your thoughts on MicroStrategy?
I don't own MicroStrategy. I think, he's a great strategist. There's no question about it. But why don't I just own Bitcoin outright, which is what I do. I don't need to lever it. I don't buy the ETF. I never understood why anybody would buy Bitcoin in an ETF and pay fees. That's insane. Look, I'm not telling people what to do, but I would never do that. If I want vol on crypto, just buy Bitcoin. You don't have to have a funky chicken strategy over it, or debt on it, or leverage, or prefs, or bonds. Just own Bitcoin. That's how I'm a purist. I like simplicity. I like to open up my wallet and see my positions and mark to market them at 4 o'clock. I don't need funky chicken.
All right, Kevin, you are going to be with us at Consensus next month, May 14th to 16th in Toronto. Give me a little preview as to what you're going to be talking about. I know you're doing a keynote, and then you have a talk called Crypto's Next Chapter.
Yeah, a lot of people are asking me about the digitization of the North American economy. And I'm bringing that to the table. I mean, there's been so much change to how business is done, including crypto creeping into it. But it's more about why is the S&P 500 margins higher than pre-pandemic? Why in private companies in North America, Canada, and the United States have margins grown from 15 to 17.5%? What happened? What happened to the economy when you would have thought the pandemic would have wiped out so many of these businesses, and it didn't happen? And so I'm going to walk through a bunch of case studies of companies, some within my own portfolio, others. These are not academic studies. These are real companies that maneuvered their way from a Nike through to a small, 500 employee company through this remarkable 4-year period. And we are in a new place now. And the direct consumer market is a multi-trillion-dollar business worldwide. All kinds of strategies have emerged, and the digital payment systems are going to be a huge part of this. So I want to encompass all of that in my keynote. I mean, I've really been working hard on this one because we're in such an interesting time in terms of business and investing. And I think that's a good way to approach the conference. And I'm looking forward to it. I've always loved this one. This is such a cutting edge group of people. It's always a wonderful event.
And Crypto's Next Chapter, what do you think the driving narrative is going to be for it?
Regulation, and finally people embracing that. The era of the crypto cowboy is over. They're all in jail or all felons, whatever. I don't want crypto cowboy. I want to integrate crypto into the financial markets so I can use them. And they can be part of my portfolio on a regulated, compliant basis. The reason I want that is I know that trillions of dollars will follow me in once we solve for two things: that it's regulated and it's okay with the regulator to own it, and the infrastructure that provides the compliance is there. A lot of the exchanges still don't have the ability to market the crypto portfolio directly into your own compliance department at 401. Even though crypto trades 24/7, you're obliged when you're managing a fund. Most funds have mandates like no more than 5% in any one position and no more than 20% in any one sector, as we talked about earlier. But you have to comply. There's a compliance officer that checks that every day at 401. So they don't like it if they can't check your crypto position, particularly if your crypto position is 19%. I've had to resolve that. I've had to figure out how to do that. And I'll get a call from compliance and saying, whoa, this position here, this H bar, went up from, H bar had a huge move in the last couple of quarters and it went way offside. We had to trim back.
Kevin, I want you to get your crystal ball out for me here. I know we're going to be speaking again at Consensus. So I want you to make a few fun predictions for us. Who knows if they're going to come true? I know that you don't have any information that would give you kind of the upper side on making these predictions. But here we go. I want to have a little bit of fun. We talked about tariffs. I know Consensus is less than 60 days away, and you gave that 60-day marker. But what do you think is going to be happening with tariffs when we get to Consensus on May 14th?
I think the European deals will be well known, and the terms will be known within 60 days, including Canada and Mexico on that. So I would say England, which is out of the EU, Switzerland is out of the EU, and the Asian countries, that will be resolved. I don't know if we will have inked a deal with China by then. That's still a question mark. So that still could be roiling the markets or providing volatility. But 60 days is a long time when it comes to trade wars. So we'll see. I think there'll be more stability in 60 days in the market because 2/3 of the war would be over, 1/3 being China.
What will the price of Bitcoin be?
I think Bitcoin will be closer to 100 than to 80 by consensus. I think it's on its mark. It's going to be marching back up. Whether it breaches 100, whether it goes through or not, I don't know. But I think it'll, that trading range that we've seen, Bitcoin kind of decoupled, as I said in the last 4 trading sessions, from the market, which is a very positive sign because it's always been a risk on, risk off, and almost correlates the NASDAQ, but it's unlocking that correlation. And that tends to have me think that we'll be more towards the 100K on Bitcoin.
Will equities be in the red?
Yeah, probably still. I don't think you'll see the performance until China's resolved and the question mark of a recession and Fed hikes are all resolved. We're going to be in that really low. We're down about 14.5% on the S&P right now, and we're in a trading range, 1,000 up, 1,000 down. Don't see that changing until you have these big question marks gone. That would be China, that would be a recession, and that would be rate cuts. I don't see any rate cuts while the China squabble is on. And I certainly don't see rate cuts while Trump is abusing Powell. That's not going to happen. You can't browbeat the Fed. It just doesn't work. I mean, everybody tries. It just doesn't work. And the market wants an independent Fed anyways.
Well, that leads me to my next question. We will have heard from the Fed on May 7th. Sounds like you're saying we're still going to be in a wait and see period.
Yeah, I think the probability of 25 basis cuts is 0. I really do. I mean, everybody's got a guess on it, but I just, if I were the Fed, I wouldn't cut right here. I'd wait.
And I think I know your answer to this last one. What is the dominant consensus narrative going to be?
I think it's going to be positive. You know that? I think consensus is far enough away that we'll be in a better tone than we are today. All the concerns you've raised and rightly raised, I think half of them, maybe more, will be resolved by consensus. And consensus will be focusing, as it always does, on the back end of the year. We also may have something very interesting by consensus, approval of the Genius Stablecoin Act.
Mm-hmm.
That would be extremely positive for consensus because it would be right around that time that might get inked. And you can imagine the buzz that would bring to the conference.
Well, it sounds like you're saying the dominant narrative is going to be positive regulation and policy news.
Yeah, I mean, look, if you, in my view, it's my personal opinion, but if you get the Stablecoin Act inked, you want to own the exchanges.
Kevin, it's always such a pleasure. We will see you in Toronto on May 14th. And thanks for joining the show.
Take care. Thank you.
And for everyone watching, if you would like to join us in Toronto and hear more from Kevin O'Leary, he will be giving a keynote like you just heard and a talk called Crypto's Next Chapter. You can join us from May 14th to the 16th. You can get your tickets at consensus2025.coindesk.com, and we'll see you there.